Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, I'm back. Been away on holiday for the last couple of weeks, had a wonderful time. Kids have absolutely loved it, feeling very much refreshed and ready to get back to work. So we're going to be starting here on the S&P, or our proxy for it, which is the SPY. We're going to be looking at the PCC, the VIX and the Dow Jones Industrial Average. Today we're just going to be trying to get a feel for what's going on in both classical analysis and the potential Elliott wave counts. So on that note, I would like to start by just taking the Elliott wave counts out of the way for the moment and looking at the chart. Let's go out to the weekly time frame and observe the chart for a moment. So we're trading around major resistance, which was price support. So if we just bring up long-term support and resistance levels, we have a level here at 415.40. This is a rough level where I've taken in these lows, these highs, these recent highs and back-tested highs again. We also have these prior lows which is support, which were back-tested as resistance here, here, here and here as well at 406. Spot 03, then we've got a whole bunch of supports down here which were never tested. We came into price support at these previous highs here. I took that off the chart as that was now back tested support and has held as a sustainable low. For the meantime, it looks like a sustainable low. We can't be absolutely sure as there is still a bearish count afoot as well as a bullish one. So we've come back into that prior resistance. This also represents the point of control from this pivot to this low. Here we have our dotted line and that's right around where we're trading at the moment. So we're right in a resistance area. Okay, looking for the bulls, looking to break out and then move higher. The bears looking to find resistance here and get rejected lower. We really are once again just as we were here, just as we were here, just as we were here and here again. We're back in the same neck of the woods between these two levels. Okay, around this volume node, and every time we come back here we end up at a little inflection point where it could have been the end of a correction. For example, this could have been 5 down, 3 back to move lower, and then we have the potential for this to be 5 down and 3 back to move lower, and then we have the potential for this to be 5 down okay, and then 3 back to move lower, or 5 down, 3 back to here, and then 5 down, 3 back to move lower. And all of these are possible until we get through what I pointed out many months ago, until we get through these bloody pivots here. Okay, 418 spot 31, that's what we call a minor pivot. That takes out the idea that this was the finishing, the completed 3-wave move back, and this is 1 and 2 down, or A and B down, whatever you want to, however you want to interpret the large count. Got to get through that. The longer term downward trend of low, high, lower low, lower high, lower low is broken when we go through 431 spot 73. That's our major pivot. I've labelled it here, and we haven't broken that yet. We keep coming back into this territory and the count remains both bullish and bearish. But I favour the bullish count. I will say that for the moment. I'm not saying it's correct, I'm just saying for the moment we have what appears to be a sustainable low and a break of a downward trend line that's been back tested. That all looks pretty positive, but it is not a break of the downward trend. That only breaks once we get through 431 spot 73, and it gets rid of this having been the beginning of another move down. Essentially it breaks that sequence of lower lows and lower highs, and that's essentially what the bulls are looking to do. But it's taking time and it's difficult because there's a lot of doubt, there's a lot of fear and there's a lot of uncertainty in the market at the moment. And while we hang around this frequently tested resistance zone, there's always the chance that we'll be rejected lower, and it actually is the bearish count. So now let's bring up some indicators here for a moment. So we can see on the weekly time frame on the MACD, right, we had this strong bullish divergence between these two lows. The closes on price, we saw a low and a higher low, we got a low and a lower low, but we have seen that on the histogram we've had this contracting momentum, right, the consolidation period, where we've had decreased bullish momentum and we've had decreased bearish momentum as we've moved sideways. This is very typical of a consolidation period before breaking out. It's corrective. Okay, so whether it's a impulsive move down and a corrective move up, and this is all consolidated corrective behavior before moving lower, or it could be a bullish move up and a corrective move lower before continuing higher. That's what this consolidation behavior tends to indicate. So, and that's what we've been doing. Now if we look at the OBV as well, we still have an overall downward trend depending on what pivot you're looking at. Okay, so we've broken this most recent sequence of downward, of lower lows and lower highs in the accumulative volume over time, and we've moved back up above that level, but we've still got this overall downward trend still in play. Okay, so bullish accumulation of volume there has been, but all it's doing is supporting price. It's not pointing out any significant divergence between volume and price. We had the same divergence occur in the RSI between these lows, and we've continued to set higher highs and higher lows as well, but we have not broken out into overbought conditions. We're still hanging around neutral territory, so we are very much in a sideways consolidation is how it feels from a classical analysis point of view. Now if we look at our moving averages, we can see that the move down from a high in 2022 January down to the lows of October 22 that year was a test of the 250 weekly exponential moving average. We also know it was a test of the roughly the, well, pretty much to the tick, the 50% retracement of the move up from the March 2020 low to the January 22 high. We came back to the 50, back to the 250, and we bounced back into prior demand, just into this area here. It wasn't the most convincing of structural tests. It just snuck itself into this prior demand zone here, whipped into it around the 250 and the 50% retracement, and then bounced. It did kind of just catch the edge of this volume node here, and it tends to be the edges of these things which tend to provide the support and the resistance. But a deeper test would have been more convincing. If we're saying, you know, a larger wave 2, 50% is sufficient. The golden zone, I guess, would have been nicer, and the golden zone could still be a possibility from the point of view of the bears if they're correct. We could come down and do something like this down to the 61.8. That's always a possibility as well, but for the moment we found support at major levels. We've moved off of that support back above the 60 exponential weekly moving average for the moment. Right, but as you can see, we've pipped our head above it a few times and been rejected. That's how things look on the weekly time frame. Let's come out to the monthly for a moment. So we can see that the 60 exponential moving average, the orange line here, coincides with the 250 weekly exponential moving average. It's mainly one of the reasons why I used 60 and 250 is because just the way the markets tend to operate. You know, so we have 60 trading days in a quarter, we have 250 trading days in a year. So these things, just as we move through the different time frames, just tend to line up nicely. That was a 60 monthly test and then a bounce from the same level. Now if we bring up our indicators on the monthly time frame, we're getting a slightly different story here. So if we look at our histogram here, our momentum on our MACD, we can see that we've had, ever since the September of 22, we had the low in October, we've had this cooling off of bearish momentum. Okay, now we often see a move down in bearish momentum, a cooling off, and then a move back into bullish momentum, and move down, and a move back up into bullish, and move down, and move back up into bullish, and move down. Is that what we've got on the cards now? We see it here during the GFC 2007, 2008, back into bullish momentum. Is this essentially the same activity as this, that we're about to, on the longer term, flip back to being bullish? Now, it's not always the case. It doesn't happen every time. For example, we've had a little blip here, bearish, bullish, and then we come back to bearish again. But generally, when we get these more sustained periods of bearish behavior, we tend to be followed by bullish behavior. We do have little areas like this where there's just genuine confusion and it doesn't seem to be particularly clear, but overall we tend to just swing back and forth, and we appear to be pretty much ready to swing back to being bullish. Like I said, not a guarantee, just we're looking at you know, momentum on a monthly basis going back into the 1990s here. We tend to see these swings. We go red for a while, then we come back into being green again. So the overall monthly accumulative volume is pretty much back at the highs. Okay, not quite, but we're not far off. So overall, we continue over the very long term to just be bullish, to continue to accumulate more bullish volume over time than we do bearish, and the OBV continues to march higher. The RSI is still hanging around in neutral territory below the signal here, but it could go either way really at this point, because reaching oversold conditions on the monthly time frame is a rare occurrence. Last time we did it was during the GFC, and we haven't done it this time, and haven't done it any time since. So unless this is part of a much bigger move, I don't really want to get into that, but unless this is a part of a much bigger move, something like this, where we get a new high and a new low in order to get a new low, and this is a much larger correction, then we're unlikely to see, I feel, unless we have that zigzag possibility here, and this is unlikely to reach oversold conditions unless we have a much more severe correction. Right, so generally a lot of other evidence to point towards this being a sustainable low, but we're not out of the woods. So now that we've touched on the classical analysis, let's come into the 4-hour time frame here, switch off all this noise, we'll bring up our counts. Okay, we'll just switch off those moving averages. So I'm just going to use a little, I've got multiple pieces of geometry here. This one I think is significant for the meantime, because this supports the bearish case of this being a broken upward channel, a failed base channel that's now being back tested. We'll talk about that with the bearish count. But the bullish count is supported by this back test of this bearish trend line. Right, this was resistance, we've broken this and moved higher. Same with this parallel channel as well, which supports the bearish channel down, which is now broken to the upside. So let's just bring in our primary count, and let's bring in our first bullish interpretation. Nothing's changed here for months, so I won't go over all of this, but we'll just talk about the most recent price action we have here, because we have two ways of interpreting this. We have an invalidation level here at 375.22. Okay, this is the minor wave pivot, so if this is minor 1, this is minor 2, all of minor 3 will be contained above this level here at 375.22. So if this breaks down, this undermines the bullish count. Okay, and we would have to look at this whole structure, whatever happens here, if we were to break down, as to being something else. Most likely corrective, most likely bearish, but we don't know if it could be bullish unless we come back, until we see more price data develop, essentially. But for the moment, it's a 1 2 1 2 count, and now this is minute wave 3 underway. We should break all of this resistance, and then that will be minor 3 finishing 4 5 into intermediate 1, and continuing to march off to new highs over the coming months and years. Second interpretation is that this is a larger correction of a flat A, B, C, 1 into 2, and now we're off into minor 3. It's not all that different, it just doesn't break down as a wave 3 extension yet. It may well still do that if we get 1 and 2 and 1 and 2 and 1 and 2, it could still do that. Right, I have this as my alternate bullish count purely because a running flat is a pretty rare structure, and a running flat in the wave 2 position is rarer still. So I think 1 2 1 2 is more likely, but this is also possible, and this has an invalidation because we don't have that secondary minute wave of 1 into 2. This is all a 1 into 2 ABC flat. That means the invalidation is back at the low of October at 348.11. So we want to get through these pivots if you're a bull. 418.31, 431.73. So now let's look at why. If we bring up our bearish count, we get this. So let's just turn off those pivots for a moment. This is the idea that we led with 5 from here. Okay, that we went 1, 2, 3, 4 and 5. That means that this is A. Okay, and that this 2 here is actually down here somewhere, right? So you can ignore that position. That's for the bullish count. That 2's actually be down here, and this could be A, because we had a zigzag, right? And then we're thinking we've got 3 A, B, C, 5, 3, 5 to here for our B. This now means that this is 1 and this is 2. It's a deep 2. There's no doubt about that. But if it is a deep 2, it has to roll over now. And it has to come down, break this low, and then finally break this low and stay within this pivot here. I've said minuet, it should actually be minute, so let me just correct that. Is it ITE? No, that's not right. UTE? I think that's right. Yes. No, that's not right. Okay, you have to forgive me. I'm having one of those moments where my brain's melting. There it is. MINUTE. Just doesn't look right, does it? MINUTE? I don't know. Minute. Whatever. La-di-da. Anyway, there you go. So this is 5 down. And this is 3 back. And we're within a teeny tiny. If we take the pre-market price, within 1.29%, 129 basis points of the invalidation level. A very deep retracement. It's got to be 90%, 89%. Here it is. So it is still potentially a 2. Right, but if it moves back above that level, we cancel out the idea that this is 1 and this is 2. Right, so we say this is no longer 3 into 1 and 2. Right, the only correction we have left there for the bears is either we steal from our bullish count, so we say A flat B C, right, and then this becomes our invalidation up here at 431 spot 73, and then you've got A B C like that, and this could still be A down, B back, C to follow. Break this level at 431 spot 73 and that option's off the table as well, and at that point you really do have to start getting pretty creative to be a bear. Alright, it's getting very difficult at that point. Still possible below these levels. I'm not saying it's impossible, I'm just saying any count which relies on the continuation of a downward trend ceases to be possible at that point. Okay, you have to be looking at something different. Now, I'm sure there will always be people who will come up with something, and that's fine, and we should always have an alternative, so we will come up with something too at the same time. But the bullish cases gain a lot more support above these levels. Okay, and a strong breakout supported by volume and an increase in bullish momentum, and perhaps even a crossover of the signal through the average line on the MACD on the monthly time frame that we looked at would be a very strong bullish signal, which should not be ignored at that point, because I think you are really fighting history, you are fighting historical trends, you're fighting the market at that point if you're still being bearish. Now, I'm not saying it's impossible, I'm just saying you've got everything against you at that point. So, I'm favouring the bullish count purely because we've had a low in place since October, we've broken a bearish downward trend, we've backtested it, we've moved higher, but I'm not confident yet. It's just my preference. Get above those 2 major pivots and I will have much more confidence in this bullish count. And that's essentially how I see things at the moment. Now, I do have an alternate idea that I'm working on as well, which is a alternative for the bears, but it still pretty much relies on staying below that major pivot and this minor pivot, and that's the idea that we've got a triangle. Now, I'm only mentioning this briefly because the E wave coming in below the top of the C wave is the exact same as the wave 2 coming in below the start of wave 1 in the bearish count. They both rely, once again, on those pivots holding. The bears need this to be rejected before it breaks that level. So it's kind of, it doesn't really matter because it's the exact same thing. It's going to result in another zigzag down or a 5 wave move down if it was a single B wave correction rather than this triangle in a WXY. So I'm just bringing it up just in case you prefer the look of it. Really, it's functionally the same. Right, so there you go. Now we'll come over and have a look at some other stuff. Okay, so I've just moved over and had a look at the Dow. Now the Dow's in a slightly different fish kettle here. We've got 8.96% off of the highs. We've had a much less, what's the word, not confusing, you know, the low's been much more certain here in terms of the bullish move we've had off of it. We had a nice strong impulsive move off of the low. We haven't had this convoluted overlapping noise that we've had in the SPY. We've just had a big thrust straight back up, breaking that prior pivot. Okay, that's the same pivot in the SPY which broke the sequence of low, lower high, lower low, lower high, lower low, high, new high, new higher low. That's why this is now labelled as a bullish count. It could still be part of a larger bearish correction, but the odds of it being so are greatly reduced by having broken that sequence of that downward trend. And if we bring in our support and resistance, we can see that we've had a back-tested trend line, which was prior resistance, which has been back-tested as support once and now twice, and we've bounced off impulsively. Looking at this move, we may have a complete impulse here in 5, which means a pullback is expected, but then another move higher should come. So I'm expecting the resistance of the long-term resistance of essentially going all the way back to these lows here. Right? If that breaks and we get through here to new highs, that's just flat out bullish. At that point, okay, you're almost back at the highs at that point. So this looks more convincing than the SPY does. However, while we are below this pivot now, in the short term, we have the possibility of going lower. But once again, get above. I'll tell you what, I'll put them on the chart. I'll say, get through here. And this is a minor pivot because we've already broken the major pivot that we haven't broken in the SPY. Here we've broken that downward trend. And this is 34712 spot 28. Okay. Now, and that's essentially all I wanted to point out here in the Dow. We've also have a piece of traditional geometry of an original pitchfork which supports the idea of it being bullish as well. So 1, 2, pivot, staying within the pitchfork. We can see how the most significant levels have been median line test here prior to the pivot, which has been tracking nicely through these levels, and then we've had a very strong support along with 61.8, the golden zone, and a test of the outside of the pitchfork now moving back up into this golden zone. So if this is 1, 2, 3, we're heading for the median line. That's our if we get back through that prior diagonal resistance through the 61.8, this thing's going to work like a magnet to pull price to new highs. Okay, and there's a pretty strong probability of getting there. So I know this all sounds very bullish, and I don't want to discount bearish cases completely because I don't think that's fair. I think it's, we have to keep a bearish case in the back of our mind, but like I've said, a lot of what I'm seeing supports the idea that it's bullish. So that's my preference. If I see a breakdown from these levels and then a move back to trend and a break of trend, that's bearish big time. Okay, we've set a new pivot and now we've swung to a new low. Now it could still be 1 into 2, but once you take out the prior low, it's all bearish. Okay, so I wouldn't want to see that kind of support break down, but for the moment it's holding and it's looking pretty good. Now, I haven't got my moving average ribbon here. Let's just put that in. Old chart, this one. So at the moment, on the daily time frame, we've got a 10, 20 exponential moving average cross through the 60, all above the 250 exponential moving average, which has been back tested here, broken here, and now swung back above. On the weekly time frame, the 250 was to test again on the Dow. It resulted in a shallower correction than we saw in the SPY, just shy of 50%, didn't quite make it to 50%, but did come back into prior support. Okay, these highs and these highs here, we came back into this little demand zone, the same demand zone as we have in the SPY. So straight into this little box here, just kissing it, just enough to find support before moving higher. So that's the Dow, which overall is more bullish. It didn't correct as deeply and it's come off the lows more impulsively. So now let's come over and have a look at the PCC, and we'll have a look at the VIX as well. So the extremes, as I pointed out before, using the line chart and the candle chart. So this is how the chart normally looks. This is how it looks as a bunch of candles. Okay, so we cancel out all that noise by turning off the price data. So for those of you who keep asking me how you do this, you just turn off the price data and you replace it with moving averages to smooth it out. Just for example, I have my 20 and my 10 here as well, so I can observe the shift and move in volatility on a 10-day time frame, on with a 10 moving average, with a 20, with a 60. Now over the long term, the long term shifts in panic and greed, I look at the 60 and the 250, because when these lines trend above, when the 60 breaks above the 250 and trends higher with it, we are heading towards extreme fear and bearishness. When the 60 line breaks the 250 and trends lower with it, we are heading back towards complacency and bullishness. So as you can see, we've had this period after extreme complacency. We've gradually marched our way up to extreme fear and bearishness. Now we're back at the 250 with the 60 and we're just trundling along it. Is the next move to break through it and start moving lower with it in the next cycle towards extreme complacency. We haven't done it yet, but it looks like we're in a position to do it. We also recorded on the candle and line chart intraday readings that were the most extreme we have seen since the GFC. Right, so essentially that's the PCC. We might be about to cross over. We can swing back and forth above this line, as we can see, as we've done a few times. So it won't be all plain sailing down. It will be a journey over. Well, I mean, this was what, the first low was 2020, August 2020. Second low was 21 February, when it took us all the time to get up to January 23. This could take us down into 2025, 26. Who knows? It could be a long journey back down. Alright, towards extreme complacency and bullishness while the market makes new highs. So now let's come over to the VIX. Now, on the shorter term, I would expect another increase in volatility. Okay, so some sort of shorter term correction in the SPY, or we break a long term support structure in the VIX. Okay, which would suggest the end of the bear market, and then, well, the bear market would have already been over, and a significant breakout into a new bull market. However, the trend's your friend. So the expectation should be, having come back once again to this long-term support that we come back to again, that we're going to get a little spike in volatility. Now it may take a little while to materialise, because we tend to just jank around for a while, right, before we have one of these, right, these little breakouts. But we might be coming down here, hanging around for a while, and then we'll have another spike. The question is, does this downward resistance line, every time we come back up, we get a little bit less volatility? Okay, so we could be contracting and contracting and contracting, right? So what? It will resolve itself eventually, probably with a spike higher, but that could take, well, how long could that take? That could take us out to 2025 or longer, who knows? Alright, so there's no point worrying about that. We might as well just deal with what we've got in the shorter term. So we've come back to this long-term support. If this were to break in any significant way and the VIX were to dive down to 12, which it hasn't been at since 2020, right, then that would be supporting the idea of those major pivots breaking in the SPY and a huge rally. I'd imagine a pretty strong rally, probably near to or even through the previous highs. At that point, all the bearish cases which rely on the prior top being in January 2020 or 22, sorry, are over at that point, and we've continued higher in the new bull market to new highs. So I would bet, and I might be wrong, I wouldn't bet much, but this trend will likely hold, and we're going to have another little spike in volatility, which could mean a temporary pullback in our bullish counts, right? They pull back, we've had 5 up potentially. I'm not saying it's done, it could be 1, 2, 3, 4, 5. We break those pivots, right, or that first pivot, and then we come back in a 2. We get some volatility build up, and then we break out higher. So on the VIX, in the short term, I can see a little bit of volatility building up, potentially because we come back to that major support. Way off the panic line here at 48.2. It's 48.2. These are all the price significant highs we've had recently, and the green lines represent the extremes, the extreme readings transferred over to the S&P chart. We haven't had another extreme reading since the COVID low of 89.47. We've only had the extreme put the call ratio reading, which, if I remember, range lines crew 1 was December, and that coincided with the low here in December 2022, which was the divergent. Off the back of that divergent low, we had the extreme bearish reading here in the PCC in December, and then we had that thrust a new swing high. So everyone got super duper whooper bearish at the lows here, and the market reversed higher. Often the case. So there you go, guys. That's how I see things at the moment. I'm favouring the bullish case. I'm not saying I have much total confidence in it by any means. I have some confidence in it, but that confidence is going to be greatly improved once the SPY does what the Dow does, confirms the Dow's behaviour, gets back above this pivot, and cancels out the idea of this being a larger free wave move. Okay, if we can do that, I'm going to have a lot more confidence in the bullish count. However, shorter term, next few weeks, I'd expect some kind of bounce off of this support in the VIX and perhaps another spike in volatility. But as we can see, it gets less and less and less over time. So unless we break that downward resistance line with a bounce and start heading towards the panic line here, we're still more bullish overall than we are bearish. But if we were to suddenly spike in the VIX and price were to collapse and take out prior lows, and I don't mean the main lows, I mean if we just break the invalidation of this 1-2 pivot and then break the invalidation of this 1-2 pivot, that would be very bad for the bulls, because that would now look like a completed bullish bearish correction and moving lower. Right, so I really am waffling now, and so let's leave it there, guys. Thank you very much for joining us. If you're new to the channel and like what you've seen, please subscribe, smash the like, hit the little bell notification icon for any form of future video releases. Feel free to leave us a comment in the comment section below, and as always, a huge thank you to my Patreon subscribers. Thank you very much for your support and your patience while I've been away. It's much appreciated. I've got a, believe it or not, I need to do another economic indicator review video for you guys, as a lot of the data which has come out in the 2 weeks while I've been away has actually changed significantly. So that will probably be coming maybe later this week or next week, and I'll be getting back to doing my live streams 2 a week for 2 hours, hopefully from tomorrow Tuesday, but I will announce that depending on whether or not the SpaceX Starship launch is successful today or not, and actually happens. If it gets delayed, I'm not missing that for love nor money, as I'm a complete space nut. So anyway, get distracted. So thank you very much for joining us. All the best, and I'll be back with you soon. Take care, guys. See you later.